Ed Clissold joins us here from Ned Davis Research Group. He's the chief U.S. strategist. What are you watching?
Well, the main thing is, have the bullish drivers of the market this year changed? And the pretty clear answer is no. Inflation is continuing to trend down. That's going to allow the Fed to cut rates starting in September. We think they're going to move slowly, which tends to be positive. And that means the economy moves towards a soft landing. And then finally, the earnings acceleration, which hasn't been gangbusters, but quarter on quarter, earnings growth has been faster than has been the previous quarter for several quarters in a row. That's the case in Q2, and looks like it's going to be the case in Q3 as well. So if nothing meaningfully has changed, there's no reason to change the bullish thesis.
Do you expect this volatility that we've seen in August for the markets to continue into September, given now this expectation and the Fed chair has just reinforced what the market expects the Fed to do on rate cuts in September?
Well, what we saw in August was really extraordinary. If you like, the spike in the VIX is something we've only seen a handful of times in the past 40 years. Interestingly, a lot of those times that happens in August when maybe there's not as much liquidity in the market. But I think that the uncertainty of the Fed going to cut rates does provide another underpinning to the market. Look, there's going to be some other concerns. Earnings estimates for Q3 are a little bit elevated, so they need to come down. We have the election coming up. There can be uncertainty over that. But the kind of volatility we saw in August is probably not going to repeat itself to that degree in September.
We're about 10 points right now from an all-time closing high on the Dow Jones Industrials, led higher by Travelers and Boeing, 3M. Give me your expectations for these sort of blue chip stocks.
Well, we think it's going to be a pretty broad advance from here, but there's a chance for catch up from some of the areas that maybe haven't done as well this year. Percentage of stocks above their 10-day moving averages is above 90%, means just about every stock has participated. And with rates likely coming down, we could see a broadening. So it'd be more than just the AI mega cap growth stocks that may be the drivers of the rally from here.
And what are you watching for in terms of even next week? We're getting PCE data on Friday. We get some view on the consumer and spending next week on Tuesday. What do you think moves stocks higher in the near term?
I think what the market is looking for is soft enough data that it's going to confirm the Fed's going to cut, but not so soft that maybe the Fed has to panic. What really is the problem for the market would be if the Fed has to go 50 basis points and then goes 50 again later on in the year. When the Fed moves quickly, usually it's because they're trying to avoid a recession, and at that point that they're failing at doing so. So we don't want the data to be too weak. So it's kind of the Goldilocks. Continued disinflation and slower, but not too slow economic growth. That's what the market would probably like.
And what sectors are you looking for quickly?
Yeah, well, we actually like utilities, but I think we can get a broadening into some forgotten cyclical sectors as well.